Hi there, and welcome to one of the most frequently asked questions that I get about RSP contributions, specifically around the timing when you have cash available. Maybe your income isn't so high, so you're not sure that it's worth doing the RSP contribution. And so let's just walk through what this looks like because there's a really interesting option in the tax return. No matter how you do your taxes, whether you use tax planning software. In this video, I am actually using the PDF forms because it's just the easiest way to kind of orient you on what you need to do. If you work with an accountant, you can also talk to your accountant about this. It's one of the things, especially if you do your own tax returns, you've actually seen this option a number of times and you've skipped right over it. And there are times that this can be a really valuable net worth building and tax planning option for you. So we're currently in the main tax form, the federal tax form, so the personal T1 form. Page 3 here is where we talk about total income. That's not where I'm focused today. So let's go into step 3 is net income. So you're going to carry over your income from the bottom of the previous page, but it's really in here. I don't know that this blue is going to stand out. Let's go here. RSP deduction. Okay, so this is the line where occasionally it gets stuck. There we go. This is the line, this 208, where we generally put in the amount that we contributed to our RSP in the last year, the amount that we want to deduct. And depending on what happened for you in the previous year, depending on your cash flow, there are times where we have extra money that we could contribute and we have the room. And then I get asked, but is it worth it? Maybe my income isn't that high this year. Why would I put all that money in there? Because I don't think I'm going to get the full tax benefit, perhaps. So again, I get this question frequently, and I really want you to understand what your options are because there's more flexibility than this line indicates, and your option actually comes before you hit this line. You'll see Schedule 7 here. There is another form that you need to fill out to really give CRA your full RSP information and background. If you've worked with me before, you have possibly heard me say that your tax return is really just a conversation between you and CRA. Most of us don't like our tax forms. We get through them as quickly as possible. We have our spouse or partner do them. We hand it off to an accountant. We don't really know what's going on. There can be a lot of value in, even at a high level, understanding what is this. If you frame it as a conversation between you and CRA, you're telling CRA what happened in the year, the notice of assessment, which is what you get back, that's CRA saying, yeah, we agree. Great. Conversations aren't hard. Tax forms, hard. Conversations, sometimes hard, but not always. All right, so I am now in Schedule 7. So this is specifically for RSPs. If you've done any first-time homebuyers withdrawal, lifetime learning withdrawal, all of that information is contained in here. So let's come down here. Okay. If you have back room and you can find your notice of assessment, some tax planning software will be able to import your information. So this may be easily accessible to you. If it's not, this is actually not the end of the world. You can still go ahead and file. But for this video, I will use round numbers. I find this most relevant, this RSP Fun Fact tax planning option, really gets relevant to my clients anywhere from 25 to age 50. I would say that's kind of the peak years where this is really, really relevant. And again, it's going to be a year where you have room available and you also have more cash than usual available, and or your income was lower than you expected. So let's again just use some sample numbers here. Let's say you've got $60,000 in room available, you've been filing taxes, you've been maybe contributing, you haven't been maximizing, you've got 60,000 in room available, and you had a year where for a variety of reasons you had a severance and then were reemployed quickly. Um, you received a bonus that you don't need for immediate monthly needs that you're willing to let go into a longer term investment strategy, anything like that. So you've got 60,000 in room available, and let's say you can contribute 45,000. There we go. And that's what you did. Okay. I'll talk a little bit more about this uh, March to December versus January to March. That can get a little bit tricky. So you contribute the 45,000, and so total contributions 45,000. Let's go down to the next page, and you have that room available, so that's fine. So we're going to carry this through 45,000. We didn't do any home buyers or lifelong learning plan, so contributions available to deduct 45,000. We're going to come down a little bit further. And again, you happen to know this, you've got 60,000 in room available, and you have 45,000. You didn't have an employer pension plan. That's what that line 12 is there. So we don't have to subtract anything. Contributions available to deduct 45,000. Enter RSP contributions you are deducting. This is where our brain just reads right through and we start thinking, why are you asking me this again? I've already told you. This is where we can maybe do both things that we want. We can get the money into our RSP, which is potentially its ultimate landing spot, and we've done some tax planning on managing our deductions. So there are situations where you might put 45,000 into your RSP in a year, and you might say, I am actually only deducting 30,000 this year. So my RSP deduction, okay. So do you see where this becomes a really great way to get your long-term savings done? The money goes where you want it ultimately to go, and you've also managed your taxes. So again, we tend to read right past this. How much did you contribute, which was on that previous page? Contributions available to deduct. That is true. What's also true, it's this line right here. How much are you deducting? And that's the amount that is going to come down here. Let's finish this off. We should be good. That 30,000 is actually the amount that's going to go over here. So again, there can be a variety of reasons that you have the money available in a certain time period, but you don't actually want to use the full deduction in this calendar year. There's a variety of reasons. Um, your income might be anticipated to be a lot higher in the coming years. I've done some projections for clients where when the money's available, we do a bigger lump sum and I can model out for them. If you actually deduct in over a 3 to 5 year period, that actually gets you a bigger tax moderation than deducting it all in the 1 year. So again, this is an option that most of us just read past and we get a little bit frustrated with our tax planning software because it's seeming to ask us the same question over and over again. It's not asking you the same question, it's asking you a different question. All right, so what's important here, you need to tell CRA that you put $45,000 in. Tell them how much you put in, and then tell them how much you are deducting. Do not just claim the $30,000 because that will mess up your room. And you will also probably get a note from CRA saying, hey, we just noticed a difference here. So again, you're telling CRA what you did. Your tax return is a conversation between you and CRA. So what you're doing is saying, hey, I put $45,000 in this year. I am deducting 30 against my 2025 income. And then when you go down, this next year, you're going to have an unused contribution amount because we didn't use your full 60. And then your notice of assessment is actually going to have an amount that you've used but not deducted. And that's why it's important for CRA to know. So in this example, we started with $60,000 in available room. We used 45,000 of it. So that means what we're carrying forward for 2026 is 15,000 of old room plus our new room that's going to be created based on our 2025 income. And that's going to give us our new available room. So again, we don't want to skip over the fact that we deposited 45,000 even though we're only deducting 30. It's important to get the full amount contributed, and then what are you deducting? So again, this can be a really interesting tax planning option, especially in those years largely between 25 and 50. You may have some times where you have an amount available. The ultimate destination is your RSP, but you have this additional tax management option in that difference between what did you contribute and what do you want to deduct. Hopefully that gives you some ideas for what is possible in 2026 or in 2025. If you still haven't done the contribution yet, you've still got a few weeks here to get something in and then plan out your taxes. Hopefully this helps.